You're watching Market Sense. We are speaking to the management of Dabur, and in fact, that company has just made 2 international acquisitions. It's spent $100 million in cash to acquire hair care maker Namaste Laboratories in the U.S. Sunil Dugal, the Chief Executive Officer of Dabur, now joins us and gives us an outlook for the business. Mr. Dugal, to begin with, how much are you planning to invest in advertising in third and fourth quarters? Can you quantify the increase in ad spends, considering you've been betting big in the personal care segment?
Well, the ad spends in the current year will not be dramatically different from what we've been doing earlier. So we would see them in the 12 to 15% band, more likely in around 13.5%, unless there is some event which makes us think differently. So it's going to be pretty steady investments in new products, as was the case the last couple of years.
Right, Mr. Because you recently acquired Hobie and the Naturals Group in the U.S. It seems like, that's the way forward for Dabur in terms of international acquisitions. Is there anything that you've frozen in on now? What is the next target really?
Well, I think we need time to assimilate these 2 acquisitions, so we are in no hurry to do anything further. So there probably won't be any further acquisition in the current year, but I won't rule out something happening perhaps next or the year after that. So I think we need to first completely integrate these operations of these 2 companies with Dabur, and then we would look at further possibilities in the developing world.
Your business in Africa and West Asia, particularly the Middle East, contributes to roughly 20% of your revenues. How does this figure change post the acquisition of Namaste?
Yes, it does. I think next year, if the same trajectory is followed, around close to 30% of our total business would come from outside India, even without any further acquisitions happening. And there's every possibility of this number increasing. If you follow the same trajectory, it would be around 1/3 of total business coming from outside India, and perhaps even higher in case more acquisitions happen.
Mr. Dugal, also, how is the overseas sales getting impacted with the current strength of the rupee? Because your second quarter numbers are showing the profitability of the international business higher than that of the domestic business.
Fortunately for us, our overseas supply chain is all centered around the country in which we sell the products. So Forex is not really any problem for us because we buy and sell at the same currency. Of course, there are some gains and losses in translation, but those are mostly revenue and not really on the profit side.
Well, Mr. Dugal, the last time we spoke, you categorically mentioned that you are not interested in any domestic acquisitions. Are valuations of companies overseas looking far more attractive than domestic ones? And again, are your potential domestic acquisition targets overvalued, in your opinion?
Let me correct that. We are very interested in domestic acquisitions. We simply don't find value in what the prices are being discussed today. The payback periods will be simply too long to justify that particular buyout. So that's one of the reasons why we're looking overseas, where targets are attractively priced, and if they are synergistic with our business line and strategically the right fit, they offer far better value and returns than Indian companies. I think we did 2 deals in the last 4 or 5 years. Both of them were sensible prices, but since then, I think the trajectory in terms of valuations has gone absolutely berserk.
Right, Mr. Dugal, Namaste Laboratories has a phenomenal distribution reach, and perhaps that was one of the reasons why you made such an acquisition. What kind of products from the domestic business will be sold through Namaste's international distribution channel?
Well, Namaste has got fabulous distribution in the U.S. and Canada, but pretty limited in Africa. And I think Africa is where we will come in, where we have actually superior infrastructure as compared to Namaste. And we'll be able to leverage that infrastructure to the benefit of Namaste products. But we're really looking at now the portfolio holistically, aggregation of Dabur, Hobie and Namaste. Each of them have got their own strengths and their own place as far as the consumer is concerned. And I think with the 3, we now have the critical mass to really build infrastructure in Africa to the benefit of all the 3 product lines.
But also, Mr. Dugal, give us a sense of what the gross margin picture for you in the second half of the current financial year is going to look like, because we did see a little over a 2% decline in your second quarter gross margins. And also, if you could tell us where the input costs are only going to rise further, leading to a sequential decline in gross margin figures?
Well, they're not increasing further, but unfortunately they're not coming down either. So we'll probably see the same margin profile coming out of India business in quarter 3 and perhaps 4, as you saw in the first 2 quarters. We had hoped that there would be some upsides in terms of at least the gross margin delivery, but there seems to be none because inflation continues unabated. We'll probably protect our EBITDAs by better management of cost, perhaps some scaling down of A&P spends if required, but more importantly, using the operating leverage to prop up our EBIT margins. So I'm a little bit more sanguine on the EBIT side, but the gross margins are definitely going to be 200 to 300 basis points lower than what they were last year.
Right, Mr. Vigal, 2 of your most famous brands, that's Odonil and Chyawanprash, they've reported a growth of about 42% and 31% respectively in the second quarter. Does it seem like these numbers and this growth rate is really sustainable going forward?
No, I think these are extremely high figures, and in the case of Odonil, perhaps a little bit more reason to be optimistic about them being sustainable. But in the case of Chyawanprash, the first 2 quarters are actually pretty small. It's a winter-centric product, and we certainly can't expect 31% growth in quarter 3, which is the major quarter for Chyawanprash, where something like 2/3 of the total annual sales happen. But we do believe we can get sales in the mid-teens for Chyawanprash, and that will be a very satisfactory situation to be in. It's a very large and very mature brand, so going this brand at around 15% is, I think, extremely good going.
Right, Sunil Dugal, thanks very much for coming in on the show and taking us through what Dabur's business plans are going forward.
All right, we will take a very quick break then in Market Sense. When we come back, lots of stocks in news this morning. We'll tell you why Relcom is sulking, and of course get you that exclusive chat with GMR management in just a bit. For now though, we leave you with some more investment ideas